Absolutely. Tariffs are giving us inflation and they're also slowing down economic activity. I did a really close look at trade between our North American countries, Canada, Mexico, and the US. And year over year, from the spring of last year to the spring of this year, compared to the year previously, every single commodity is down except for computer parts and aircraft. Everything else is down. Steel is down 20%, but computer parts are up 25%.
So the new tariffs, which were put in, I think, in the last 24 hours, 10 and 12.5%. And I get all the details, but it's a Friday in July. I can't focus on the details. Martha Gimbel says all in, we're at 9% tariffs. That's way above where we used to be still, right?
Well, actually, so the 9% is before the last 24 hours. Now the Yale folks are saying it'll be closer to 13. And so that does raise us up a few percentage points from, sort of the tariff scheme of the last few months.
Right.
So that really begs the question, what is the point here? Are we really thinking that tariffs are going to help with the federal debt and deficit? Because, everybody says they're really not. It's a drop in the bucket. And does it slow economic activity? And for members of the conference board that maybe want to build factories, it's a lot more expensive. And what is our trade scheme? Are we going to be able to trade, for example, with Canada and Mexico in a confident way?
No, Erin, these new levies are designed to prevent forced labor in the supply chains of our partners. Right. No, I really have to ask you about this. And you mentioned Mexico, we Canada, we are getting close to September when those renegotiations are going to take full effect. I know just this morning, Greer was meeting with Scheinbaum. We have, the EU and China retaliatory tariffs on one another. Talk to us, give us a little bit of an update from your vantage point as to where we are here heading into a very active September. Certainly Xi and Trump are going to be meeting about this, no?
Right. I think these tariffs are, let's put aside the federal deficit. Let's put aside, encouraging onshoring and nearshoring. I really think that they're a strategy for negotiation. We have had no formal negotiations with Canada around USMCA. We're the only of the three countries that is sort of opting out and going year to year instead of, reaffirming for another decade. And, threatening 50% on Canada for a lot of these commodities and materials and sort of just stringing our neighbors along is definitely not making the case for nearshoring and onshoring. And I think it's a negotiation strategy.
Sorry about that. Well, talk to us about that meeting between, President Xi about President Trump. Can you, as some of these big dates are coming up, these negotiations are coming up, how do you expect, the markets to be, kind of maneuvered, I guess is the way I would say it, right? Like, what does the Fed want? Like, does the Fed want inflation to go up? Does it want it to go down? Do they want to cut rates, hike rates? How does all of the tariff talk, all of this trade uncertainty feed into what the central bank here in the U.S. is going to do?
Right. So at the conference board, we do not think the Fed is going to do anything basically for the rest of the year, that they're going to sort of have a wait and see attitude. And, folks may remember back with China, our 1 year truce took effect starting back in November. So I am very interested to see, when we have these discussions starting in September, are we able to sort of reestablish certainty? And, regardless, I think for companies that are looking at their manufacturing footprint, it takes 7 to 10 years to build a factory. And if you don't know and understand, are these things going to be in place for another year, another 2.5 years?
Right.
It really just creates so much unpredictability.
What's the granular study at the conference board right now about a slowing American economy? Atlanta GDP is under 2%. Do you buy that?
We do. Yes, we definitely think things are slowing, and it's really sort of big structural issues. You guys have been talking about housing today, and I think about housing all the time. So many of our members sell consumer goods that we wouldn't even think are related to housing. Things like pet food, flooring, just sort of consumer materials. When people buy houses, they buy a lot of other things. If the first time home buyer, within the last year is now 40 years old instead of 33, that's a delay of a lot of purchases. It's the delay of a lot of life decisions that trigger spending.